Good morning, everybody. It's Wednesday, May 21st, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I will be sure to get to it during the show. Overnight markets here, July corn up 2.5 at 457. July soybeans were up 7.25 at 1060.25. And July Chicago wheat was up 6 at 552. No export sales announcements here this morning, so we'll jump right in. Obviously, saw wheat catch quite a bid there yesterday. It was a real good, positive day in the markets. And as we were talking before the show, I know we're starting to bump up against another key moving average here for new crop corn. So Justin, maybe give us a few thoughts this morning, and then we'll throw around the room.
Yeah, Dan, kind of like we talked about yesterday, we were, before yesterday's open, we were close to starting to hit, kind of a cluster of moving averages, the 200-day, 25-day, 50-day, 100-day, all between, call it, 48 and 54.5. So we're a couple cents away from that this morning. Really just looking at, this big chop that we've been talking about, and, you get kind of that 430 area or below is, I think, really tough to push through. And we did it with 100,000 contracts of farmer or fund manager selling. Now, most of that, if not all of that's definitely underwater now from where they started selling it. So got those guys underwater going in the growing season. I think, interesting to see what happens here. Really, I think kind of that 460 area is probably the really hard part to get through. We've had pretty good weather. We'll see what the forecasts look like. We're going into a 3-day weekend. So not surprising that we're kind of bouncing back here to the moving averages, and it's still gonna be a chop. I think if we're, probably 460-ish, low 460s, probably going to attract a lot of selling, I would think, with the way for the farmers that got in good and the crops are looking good. I would think that's probably a good area that you're going to see some selling on a rally, and to take it much above those areas, we're probably going to get some new information, whether it's a weather change or trade deal or all those kinds of things we've been talking about here for the last week or two.
Yeah, very good. Dustin, we were talking this morning before the show, it's just nice to see some life in the markets and some, I guess, newer dynamics, because it was getting kind of ugly in corn there for a little bit. So what are your thoughts this morning?
Yeah, it's it's a lot of it's new crop rallying too, and it's not just old crop tightness. December is outpacing July on some of this rebound for corn. I think the market is it's got to look at those balance sheets still and say, like, have some imagination about what can happen. I mean, in both directions, of course, but there's a reason we typically make highs somewhere in the mid to late June timeframe on a seasonal, and we don't know what that long-term forecast is going to show. It could very well be, a wet forecast for July, and we have a really good growing season to top off the good start that we've had. But it could easily turn off dry too. And in this situation, demand rationing, I think, has not been priced in very much.
Yeah, Ben, what's on your mind?
Yeah, I looking at December corn, and we, in 2.5 sessions, 3 sessions, we've undone about 14 days of trade. So feel fairly optimistic about that. I concur with Justin. I think that for now, 460, 462 up in there, we'll probably catch a fair amount of it till we know more. But it's nice to get off the mat. And just kind of looking back, we've seen some sharp rallies when corn turns. And in this case, managed money is fairly short, and I'm sure they've covered in the last few days, but how do they want to deal with that? And that kind of ties into Dustin's comments about what is the forward look. And I don't know that being short right now is a great trade. I don't think you're going to get paid on it, and you may have to take a tremendous amount of heat before it comes back your way. And if there's one thing that managed money doesn't like is heat. They will jump in and out of markets multiple times. Hopefully that's the case. We create volatility, we get some good opportunities. So I'd like to see that it's turned, hopefully, at least for the short term. And we're going to be open to the possibilities that maybe we don't have a 181 yield. So
And is wheat kind of like a, what happened in the last couple sessions with wheat is a little bit of that indicator, right? I mean, you got the funds that have been obviously pounding wheat and been short wheat, and you get just a little bit. I mean, you got crop conditions, that were lowered. You got some global weather that's kind of creeping in and catching some news, and you see them come out, and wheat was up, 17 or 20 cents or whatever yesterday. So I think it just highlights what can happen here.
Wheat's got a little bit, it's got some issues in different places. It's always hard to put your thumb on it. Where a lot of wheat is grown in Australia, kind of near the southern coast of Australia, eastern side of it, very, very dry. That's where a lot of their wheat is grown. And there were reports yesterday of some frost in Russia. I think that the wheat market is the most irresponsible commodity out there because of the amount of shorts that are there, not just in the CBOT contracts, but in the Matif, places like that. So I think it probably runs some people in, and it's going to take a little bit more this time of year to run them out. But I think wheat is a market that could get really dicey post US harvest. It has a tendency to have a really nice run into fall. We're going to be heavy on corn acres this year, which, that lends me to think that maybe a little bit less wheat. And you start to get the realization that maybe there were some problems in some other places. So, seen some really nice rallies in wheat over the years between July and October. So I think that's when that short becomes extremely vulnerable.
Just to add kind of a macro level too. I mean, we talked about it before the show, but the big beautiful bill, right? I mean, we talked about it yesterday. We're increasing spending. I think we've gone through over a year of kind of the market trading. All these rate cuts, inflation coming down. I think our markets have been kind of hit with that mentality too. That we're going to have plentiful stocks of everything, cheaper interest, all those kinds of things. Now you've got the dollar back below 100, bond markets, back to the highs, as far as interest rates are concerned. Japanese, and it's kind of happening everywhere, Japanese bond rates. So, we could be setting up for another round of inflation too. I mean, maybe that's part of why we see, these rallies led by the back end of the market, where you're building carries into the market. It's not being led by, an old crop, squeeze or shortage. It's actually been led by the new crops. I mean, even all the way out to D's 26, corn, for example, catching a bid. So, that could be something too, where the funds have these big short positions in our commodities with the dollar that's going down and interest rates going up, with really not plentiful stocks yet, right? We're just forecasting that if we have record yields, we will have plentiful stocks. So there could be a combination of things brewing that's just maybe not a comfortable position to be in as a short, with the macros not really backing you up right now. So.
Oh, very good. Anything else to add there, fellas, before we move on? All right. Ryland, quickly here, we'll go through pretty light volume in cattle yesterday. I had a cattle on feed later this week, and then we continue to see a build in open interest for hogs. So I guess what are your thoughts here as we start the morning?
Yeah, another new high here in choice beef, 358.75. That was up almost $4 yesterday. Select was up 85 cents. So I mean, I think there was just a lot of caution after last week's kind of trade, but we're not really seeing that much follow through pressure. So path of least resistance to this market is higher, and I think just that technical formation is creating a pretty cautious environment right now. So we've seen everything just kind of back off. Seems like trade in the futures and options compared to last week has just come to a screeching halt. So I think everybody really wants to see what happens with cash this week. We have seen a little bit of light trade in the south at 219, but really quiet pretty much everywhere else. And then obviously you got the cattle on feed report, looking for 98.5 for on feed inventory May 1, placements at 97.1, and marketings at 96.8. So we're going to try to price these numbers in right now, and just overall, like I said, it just feels like everybody's waiting to see what the Packers are really going to do here. Seasonally, the market typically stays pretty strong. at the end of this week, or at least pretty much starting the end of this week into expiration if you're just kind of looking at August. But obviously this is going to be kind of a anomalous kind of year, with new records being broken daily price wise. So once again, I think just we're not seeing the trade really back off that much, just obviously quite a bit of caution. And then on the hog side of things, yeah, we're seeing the open interest build a little bit, up another 2,000 contracts. I think we are seeing a lot of that producer hedging now that we're just kind of hovering near contract highs. We are seeing cash markets start to see a little bit more follow through, but obviously there's just that big discount right now. So I think that's really what's kind of stalling out futures progress right now. So cash coming in at 93.40, up 89. Carcass was down a little bit at $1.52. So it just kind of feels like everybody's waiting for the post-holiday kind of trade in the meat and see if we get some real follow through and maybe spark a little bit better kind of demand sentiments going into grilling season. But overall, I think you baked in a lot of really good news to this market. We're drawing out the hedgers right now.
Very good. Appreciate the update there, Rye. One thing to note, tomorrow morning we will have weekly export sales. Those will be out at 7:30 Central. We'll take a look when those come out, talk about it in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.